HPQ is up 14% this year, which is trailing the market, but it's a stock that I own, and it's a stock that Warren Buffett owns. Now, remember, just because two people, obviously Warren Buffett's a lot more reputable than me, own a stock does not mean you should own it. Don't buy it because I own it. We're here to teach a process and give you the tools to make your own decisions. I like HPQ, even though the business has a lot of headwinds, but that's what we're here to discuss today. So let's go over some fundamentals of the company. Whether you're a beginner or more advanced investor, there's something in this video for everyone. So stick around. We're going to go through some news, some bull and bear cases, some high-level metrics, of course, go through our 8-pillar process and look at analyst estimates. And then we're going to finish it off with what's probably most on your mind, which is what price should I pay for HPQ? That we're going to use our stock analyzer tool, which has become very popular. So let's go check out HPQ. Mo, HPQ is not sexy. They do a lot of PC sales, but they are a big PC manufacturer. Yeah. But the printers, what everybody gets there. And by the way, I have a new HP printer. It's like a 9100 series. I effing love this thing.
Yeah, they're great.
They print so quickly. It's all wireless. It's so easy to do. And I'm not saying that's a pretty standard thing.
Printers are one of those things where you get what you pay for.
Oh, 100%.
Yeah.
I had a $79 printer at home, and it was like literally every 2 seconds. And I remember it was like brand new. And then Lisa was like, this thing stinks. I'm like, buy a new printer. She's like, no, we can deal with it. I'm like, no. And I spent $250 and the printer's been incredible.
Yeah.
Now, paper ain't going away, but is it decreasing in its importance? Absolutely. But remember, let's go look at the revenue for HP over the last 10 years. Now, there's a lot of skewed information here because they were a $111 billion business 10 years ago and now 55, which is drastically lower. But they sold off some divisions here, brought some on, so it's a very confusing structure. What I want to look at here is focus on the last 5 to 7 years of profit. Profit's down this last year, but before then, it was pretty consistent. 4.5, 4.2, 2.5, 4, 6.3 billion. But the biggest thing I want to show you guys, look at shares outstanding. 10 years ago, they had 1.87 billion shares outstanding. Today, a billion. 5 years ago, today 993. Yep. 5 years ago, they had 1.5 billion shares. So guys, even if the business declines slightly every single year, if they keep using their cash flow to buy back shares, they're giving you a bigger and bigger piece of the business and driving up earnings per share. Let me explain that further. Let's say a company has, let me just pull up an example here. Let's say a company has $10 in profit and 10 shares outstanding. That's $1 per share. Let's say 5 years from now, their profit actually declines to $8 per share, to $8 overall, but they've bought back half their shares. Now they have 5 shares. They're now making $1.60 per share. So that's how they drive up the earnings per share. And if you're going to pay 15 times earnings here, you go from a $15 stock to an 18, to a, not even. So 60% is $24 stock. That's how you drive up earnings per share. Even with earnings going down overall for the company, if you buy back enough cheap shares, cheap shares.
As we've been seeing.
Yes, you can drive up the value of the company. And I'm sure HP has that in their mind. Look at some of the things that make HP incredible. Mo, did you see their return on invested capital? It's insane.
What is it?
It's like 300%. Oh my God. 1 year is 50% because their capital base is so much lower because they keep buying back shares, keep decreasing. Look at this dividend yield, 3.4%. 3.4% dividend yield. And guess what? That dividend paid is $1 billion. It's very secure because in the last 5 years, they've averaged 3.8 billion in dividends paid. And last year was 2.9. Guys, don't fall for the trap of just looking for dividends. I'm active on Twitter. I love being on Twitter. I get very annoyed, and I have some dividend people who are my fans. I'm not trying to criticize personally. I'm just sitting there saying, guys, don't focus on dividends. Focus on total return. It is nice to get that check. Don't get me wrong. But the dividends paid should be the last thing a company does with their money. It's tax inefficient. Some troll was trying to tell me, oh, it's not tax. Yes, it's tax inefficient. It absolutely is tax inefficient, and here's why. The company already paid taxes on that money, and then when they issue you a dividend, you pay taxes again on that money. And that makes it tough. But look at this, guys.
Mafioso.
5-year PE of 7.6. That's why they're buying back shares intelligently. Keep buying back those shares. Keep buying them back. Now, overall, it's hard. It is hard to look at a company like HP and think, this is great.
Yeah, it's hard.
Because PC sales, they're declining, right?
Yeah.
So let's look at their the 8 pillars here. 5 of 8 pillars are checks, 3 of 8. And remember, guys, if you're part of our community, you can edit the My Pillars here to make up to 12 different pillars and 4 quadrillion different variations. So, of course, that's there. Mo, when I look at these, this looks like a declining business, right?
Yeah, but that's not necessarily a bad thing.
If you pay a cheap enough price.
Right.
That's the key, guys. Everything is worth something. As long as you can, remember, if you have a company that's going to make $5, then 4, then 3, then 2, then 1, and go to 0, isn't that worth something? You still have $15 of cash flow coming. It's worth something.
And every business goes through the cycle of decline.
Yeah.
At some point. I don't know when it is, but.
Does that mean it has 0 value?
No.
No. And that's all we're trying to argue. There's a cheap enough price to be paid. And if a company is cheap enough where they're able to buy back their shares and make it worthwhile for the investors, I think that's a pretty good reason why you might look at the company. That's what I feel about HPQ. That's why I have it in my portfolio. But again, that works for me. It might not necessarily work for you. Yeah. I'm hoping that my personal opinion, Mo, is I want HPQ to stop their dividend and just use it to buy back. That's $1 billion a year they could buy. That's 3% of the company they could buy back every single year. Right. If they took this $1 billion and instead bought back these shares, if the price stayed the same, they'd be buying back 3% of the business and increasing every single year.
Cut that dividend. Let the stock price fall 20% because people get pissed and then start buying back shares.
Like crazy. Yeah. That's the difference in capital allocation.
You're welcome, HPQ.
Yeah.
CFO.
That's the thing, guys. Like, people hear that and go, are you crazy? We think to ourselves it's exactly the right thing to do.
It's going to benefit shareholders way more in the long run.
Yeah, absolutely.
Way more in the long run.
Way more. But, of course,
that's
people like a dividend
yield.
yield.
Popular thing to do.
Yeah.
Right.
All right, so let's go. In our community, we have a chat about our videos, and HPQ is one of them. So, Mo, why don't you go over some of the ideas that we had in our community of our like-minded investors who sat there and talked with us?
So let me go through a couple of headline stories
first. Great.
Yeah. So this is a very interesting one because you said PC sales declining. And remember, that was the big thing. We had this massive spike from everybody staying at home, and now they're falling. There's a report here that came out. It's an opinion piece, but the PC deaths are greatly exaggerated. So what they're expecting to see is 3.7% year over year of units sold, that's in 2024, putting them above 2018 levels, but not in par with the 2019 levels. I look at this and say, after looking at their income statement, it has definitely declined. They're down about $10 billion from the previous year in revenue. I'm worried that does continue, but even if it does continue, like we were just discussing, it's fine as long as you pay the right price for it. And I think people are putting too much emphasis on the guess of where the PC market is going, don't you?
Yeah, and the other thing is, we saw a big shift to mobile, right?
Yeah.
But now we're seeing a big shift to companies making basically PC type business type products. Like, look at the iPad Pro. They basically try to emulate a laptop.
Well, did you hear what they're doing? There's rumors out there from macrumors.com that they are going to now come out with the new iPad that's going to be shifted more towards what a PC is.
That's the thing.
I mean, my iPad that I have a keyboard and a trackpad connected to it because it's more like a computer now.
Yeah.
So I'm not necessarily on board with everything that people are saying. Now, they have a Poly Elevates workspace, and they're in collaboration with Google Cloud. So it's not like they're just this dead company laying in the corner and not trying to get hip with the times. They're participating with Google right now. Let's see. A couple of bull cases. Cash generation, you'll probably like this. Cash generation was the highlight of the most recent earnings, generating free cash flow of up to $900 million from $300 million a year ago.
Wow.
A lot of cash flow. That's a lot of cash flow. And cash from operations of $1 billion from $400 million a year ago. They've retired $1.1 billion of its long-term debt in its most recent quarter. Now, a couple of bear cases. Global printing revenues are only expected to grow 0.81% through 2028. I don't know how. I don't know. That's a heck of a guess.
So let's look at this.
Okay.
And I think this is, was this mentioned? So people in our community, like over here, guys, when I open our community chat on this, everybody's talking about bear case, PC sales fell 11%. Alexander mentioned that. He is correct. Rich mentioned the same thing. Yeah, this is a very common theme. Now, they're wrong. Now, they're not wrong. In the last 2 years, PC sales have collapsed. But look at this. This was 2006. Remember, the iPhone came out in 2007. The shift to mobile phones being our computer, and we're still above that level of sales, units being shipped. As the world becomes more and more technologically savvy and economically independent, people become wealthier. I'm sorry, we have developers. I don't know a single developer who codes on their iPhone. No. Do we, Tim? No. Not a single one. Doesn't mean it's not going to change. But there's still going to be a need for PCs. Me personally, I like doing work on a desktop or a laptop way more than my phone. I use my phone as my go-to for quick stuff. Again, that could be me. That could very well just be me. But I look at gamers. People like playing games on their phone, but the true gamers play games on their computer. Again, maybe I'm being biased about this. I have my own bias about HP, but I look at this saying, you know, we had pretty flat right here, 15 to 19, and it was looking pretty bad. And then an uptick during COVID because people spent more time at home. And remember, if we do that with stay at home and things like that, I look at this saying, yes, this is a drop. And if we have an economic downturn, my guess is this will drop further. But this is the time to understand HP because I think it's cheap right now, inexpensive. And if things go further down, that is much better. Mo, what else are you seeing from our community of comments?
So I really like this comment. This is from Roger. They believe in buying back shares at a cheap price. I like that he recognized this. They did not buy back any shares last quarter. They did buy back shares in December 2022 at a price of $27.60. In the last 10K, the most expensive shares bought back were in August of 2022 at $33.58, but definitely bought more shares in September of 2022 at $27.02.
Roger, spot on.
Yep. Roger, this is for you.
We're going to
send this to you.
We're going to send you one of our Everything Money shirts. Why don't you show the other one up too? Yeah. Roger, let us know which one you want. Do you want the Everything Money or Stocks Only Go Up, bro? Either one, let us know.
Email me, mo@everythingmoney.com.
Thank you for the great comment. I think you're 100% correct there in looking at the fact that they're picking and choosing the right. So somebody at the company is a good capital allocator.
Yeah.
That's the number one job of the CEO. And it's something in our community that people are starting to understand more and more. Not overpaying for shares. Buy back shares when it makes sense because they have your money. You have a stake in that money when you own shares. You want the CEO to be buying back the right shares at the right price.
Yep.
Correct?
Yep. Guys, if you want the shirts, whatever, cups, we have a lot of different stuff, everythingmoney.store.
So it's funny, Nassim over here wrote, bear case, did you try to print a page on an HP printer over Wi-Fi recently? I asked my kid. I go, actually, I did. I literally wrote it right before this video. I go, I actually did this weekend.
I did.
Tim did too. Listen, but remember, I will be full disclosure. My wife-to-be loves doing things on paper. She's a designer. She likes to see them right there and do it on paper. And we're doing a house right now. So she's printing 84 things a day, and the printer is currently in my closet because we're in a temporary house. So every couple of days she'll be like, Paul, you need to replenish the paper in the, she actually says to me now, hey assistant, would you please replenish the paper in our printer? She actually says that. And on Twitter, by the way, guys, did I put this on my Twitter yet? Yeah, I actually put on my Twitter as part of my description, Lisa's personal assistant, because that's all I do for her. All right, so let's go back to some analyst estimates. Now, here's what's interesting, Mo. Look at the analyst estimates for the company. Expected to make $3.40 per year this year and increasing for the next 4 years to $4.14. I'm sure they're factoring in share buybacks here. Okay, but look at this. Revenue, $55 billion. Guys, look how bad this revenue growth is. But it's still there. There's still some revenue growth estimated by analysts. Guys, remember, hypothetically, let's speak hypothetically here. Let's say that they're able to make, I'm going to cut this all down to $3 a share. $3 per share per year. 1, 2, 3, 4, 5 years. 5 years, $3 per share. If they spent all of it, every single dollar of it, buying back shares for the next 5 years, and they paid the current price today, they would buy back $15, which is half the company. So then this $4 would become $8 per share. What would you be willing to pay for a company that has $8 per share in earnings. Let's say it's a declining business and you're only going to pay 8 times. That's still a $64 company per share. And the stock is currently at
$30.
$30. That's my hypothetical where I talk about how buying back cheap shares can help investors. If they take every dollar of that profit, I discounted it down to $3 a share, even though all analysts say they're going to make over $3. Let's see. Somebody made a comment in the community to me. I will not check that now because in case it's a something having to do with something personal, I don't want to disclose that. But that's the key to buying back shares. That's the key to HPQ. All right. So leads us to what's the price to pay for HPQ. Now, guys, if you're interested in this and joining our community and being active and learning more, check out our next video, or check out the video above here, right, Tim? The video above here on the software and the community. That way you can learn more and realize how the community can help you become a better investor. And guys, also, if you're already part of our community, please go to the general chat and tag me if you disagree with my assumptions or about ready to put in there. So again, in our community, go to the general chat and write down here and comment below about, hey, Paul, tag me. Hey, Paul, I saw your assumptions in Stock Analyzer tool. Here's where I agree and disagree because I really want to engage that in this conversation. So let's go check out the Stock Analyzer tool. So for the Stock Analyzer tool, Mo, let's go through a 10-year analysis here. This Stock Analyzer tool helps us. We don't know the future. All we can do is make assumptions. This allows us to put our assumptions in about the future, not including the balance sheet, just about the revenue, the profit, the free cash flow, and the multiple paid at the end of the time. Input our desired return. What return do we want to make owning this company? And then spits out a value. So Mo, revenue growth numbers. This is going to be a tough one.
Yeah, this is hard. So I have -2, 0, and 2.
So actually, let me do this. Let me pull up what we pulled up last. Let's just do this. Let's pull up what we did last time. June 12th, 2023. When I look at our history, was the last time we did this. Let's go sit there and pull it back and see if we still agree with this assumptions. Okay.
That so what?
-2,
okay.
0, and 2.
Okay.
Our comment was, listen, if they keep declining, fine. Now, is -3 appropriate? Is -4?
That's where my struggle was. Is -3 appropriate? Should I go
let's do
lower?
That.
Should I go
let's go
higher
-3
on the high side?
And let's go 2 on the high. Let's go 3 on the high side. Because let's say inflation's hotter. Okay. Profit margin.
I put in 4.5, 5.5, 6.5. What did we put here?
We put 5.5, 6.25, and 7.
Okay.
Let's do this. Let's go 5, 6.25, and 7.5. Let's say they absolutely kill it. They find something to really make money in. They get more into cloud computing, et cetera. They get into other areas that are higher margin.
Okay.
Okay.
Now I actually went higher free cash flow. I went 5.5, 6.5, 7.5.
Okay, I'm fine with that. We did 5.5, 6.25, and 7.
Okay.
I will do the 5.5, 6.5, and 7.5. Now for PE, remember guys, PE should be higher if you have a high growth potential, high return on invested capital, which this company does, and a moat. They have a high return on invested capital, but no high growth potential, not a high moat really, except for the printer business, which is probably a very declining business. So we did 12, 14, and 16 on the multiples before. I actually want to change this.
I had 12, 13, and 14.
I think 12, 13, and 16 is better.
Okay.
Because if they get back to growing and they get back to some other areas with higher margin, I think it can justify in 10 years being a 16 PE because of their high return on invested capital. In fact, that might be low.
Mm-hmm.
Now, finally, for desired return, Mo, you can get 9 or 10% from investing in a long-term ETF. What do you think? We did 12, 14, 16 last time.
Okay. I did 10, 12, and 14. And I do think that, that's some...
Because you're right.
Negative revenue growth.
These are pretty weak.
Yeah.
I actually kind of agree with you on that one. But I actually am going to do 11, 13, and 15.
Okay.
I'm going to hit the analyze button. Now, guys, I just need you to stick with me 1 minute longer. When I go through the numbers here, I want to explain what these numbers mean. It's really important that those of you who want to learn a process to make life easier for you, to listen to the next minute, it's worth it. And again, if you're interested in their community and what it offers, making investing better, and the software involved, make sure you watch this video in the top right. Boom. Low price of 20 to 22, high price of 44, middle price of 30. If you pay today's price of $30 and the low assumptions occur, you're gonna make 6%. This includes the dividend. If the middle assumptions occur, you're gonna make 14%. If the high assumptions occur, you're gonna make 21.6%. That's all this means, guys. Thanks very much for watching this video. I appreciate your time.